What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you the stocks that are at the top of my watch list going into the week ahead, as well as how I feel about the market conditions. And this week, I also want to share with you a couple of lessons about supply and demand and how they can affect the price of certain securities. So if you get any value out of this video, please remember to click that like and subscribe button, and let's jump right in. Okay, so first things first, the major things that we really need to consider and be aware of as we look at the market are a couple of different factors that are really influencing the direction of the market. And those factors are primarily the Russia and Ukraine conflict. That's the strongest and largest factor right now. That is the world headline, and that is what is really shaping the markets. But underneath of that, we also have rising inflation, especially in North America. I want to say Canada's at 5 or 6% and the US is at 7%, which is very, very high compared to the last sort of 20 years. Because of that, we are expecting rising interest rates. Bank of Canada just increased interest rates, and the United States is expected to do the same thing in about 10 days time. So we could see some volatility there, and any companies with lots of debt on the balance sheet are going to feel a little bit of pain here. And then on top of that, the Russia-Ukraine conflict is also putting a whole lot of pressure on the supply of energy. So we're going to dive into that in this video. I usually don't talk about energy, and especially oil and gas, but as of right now, it's too hard to kind of ignore. So we're going to dive into it, and we're going to talk about the supply and demand factors that are influencing the energy industry right now. So make sure you stay tuned for the rest of the video. Now, before we get started here, I just want to talk about a video that I made 2 weeks ago where I said that defense stocks will do very well if the Russia-Ukraine conflict continues, meaning that if Russia continues to invade and escalate the conflict, these three stocks are going to do very well. I posted that and I said that in this video right here. I'm going to play that clip for you real quick right now. Now, if we do see an escalation in the conflict between Russia and the Ukraine, I do think that some of the defense companies or some of the defense stocks could do very well. These are the companies that make the ammunition or the weapons or the guns or the planes that feed the war. Okay, so now that you've seen that clip, here are the three stocks that I've pointed out. And as you can see, in the last 2 weeks, basically, since I made that post, Northrop Grumman is up 20% since that video. Raytheon Technologies is currently up 7% since that video, and the stock is also breaking out, doing a small little pullback right now. And Lockheed Martin, LMT, is up 19% since that video, and they have a very, very strong breakout, good volume right now. And on Friday, they set an all-time high of $462. And so all three of these defense companies are doing extremely well, and it's really important to try and understand why. So why are these stocks going up, and what is happening here? And it's very, very simple when you think about it in terms of supply and demand, because increased conflict around the world, particularly in Russia and the Ukraine, leads to more defense spending. Governments get worried that they could get involved in a war, they could get brought into a conflict, or a conflict could get brought to them, and therefore they spend more money on defense, on ammunition, on rockets, on nuclear programs, and on all of those different types of things in order to better prepare themselves. Now, because of that, this defense spending leads to more orders for these companies. The three companies that I just pointed out to you here: Northrop Grumman, Raytheon Technologies, and Lockheed Martin. Now, because these companies are bringing in more orders, that means they are bringing in more revenue and more profit. And because they are more profitable and they have more revenue, that means that those companies are going to be worth more. So that's why the stocks are going up. And basically what's happening here is that the demand for these technologies and these weapons and these systems is increasing, but it's not like there's another company that's coming in to fill the demand. All of these countries are buying from the same companies, and so therefore the supply is stable, the demand is increasing, and that's what causes the price to go up. So that's why we are seeing these stocks that are up by 20% in 2 weeks, 19% in 2 weeks, 7% in 2 weeks after a major pullback. And so really, really interesting to see that. Now, if you're interested in seeing a little bit more of this kind of in-depth and when I buy and sell, definitely consider checking out my Discord chat. That is where I'm trying to build a community of traders all online in a Discord community where I post all of my buys and sells. I have an Ask Me Anything, so you can literally ask me any questions you want. I share my research and I encourage others to share their research. And I also have a daily market update in there. If you're interested in access to that, it's $5 per month. You can literally see everything I'm doing behind the scenes on a daily basis. Okay, now that we've got that out of the way, let's start looking at the market and the indices. And for me, I look at the NASDAQ, the S&P 500, and the Dow Jones. As you can see here with the NASDAQ on one-day candles, we are in a very clear bearish trend right now. From a high of 16,212, we're now trading at 13,313, and it looks like we are setting continuously lower lows, which is not a very good sign. When it comes to the S&P 500, again, it's the same thing. We have lower lows and lower highs, which is not great to see. It's not good, and we continue to fall through support. We're currently trading below our 200-day moving average. And in the Dow Jones, again, you can see it looks like we established some support at 34,000. We set a lower high and then a lower low, and it's very clear that we are still in a bearish trajectory. Now, the Bitcoin chart is slightly more positive. We have some higher lows that were formed right here in January and then at the end of February, but we have struck resistance at 45,000 3 times right now. And so it looks like we could be forming a bit of an ascending wedge or an ascending triangle. I'm expecting hopefully some support to kick in here around 38, 39,000, but we're really gonna have to be patient on this and see how Monday, Tuesday go. If we find good support right here at roughly this trend line, that could be a great buying indication. And then the second buying indication would be the break of 45,000 here. So that's what I'm going to be watching for, at least me personally. Now, when it comes to earnings this week ahead, we've got a lot of companies reporting earnings. No major, massive companies, but definitely a lot of companies. I'm really looking at MongoDB. This is a database company that's been struck pretty hard here. They are reporting right here on Tuesday after the close. We've also got CrowdStrike. This is a cybersecurity company. We got JD.com, a Chinese company. We've got Blink, which is a charging company. DocuSign underneath that, and Rivian also coming out on Thursday after the close. So we got a nice full week of earnings. No major companies, but a couple of exciting small companies down here. So lots to pay attention to this week. Now, there was one tweet that I really want to point out to you, and it came from Elon Musk. And usually I don't show individual tweets on this watch list, but this one was kind of surprising. So on March 4th, Elon tweeted that he hates to say it, but we need to increase oil and gas output immediately. Extraordinary times demand extraordinary measures. And basically what he's referring to is we have very clearly seen that Russia may not be able to export all of that energy, and therefore we have a decrease in supply that is causing prices to skyrocket, and it's having a lot of negative impacts on a lot of different people and industries. And as of right now, we have not shifted over to electricity in all of our different modes of transportation and energy. And so oil and gas is extremely, extremely important. Elon Musk is kind of pointing that out right here. And honestly, I never thought I would see this tweet from him. He is definitely not a proponent of oil and gas. But it's very, very interesting to see. And when we look at the supply and demand side behind this, it's also very interesting because if the world stops accepting Russian energy, meaning oil and gas primarily, that will limit the supply, meaning that the supply is going to be constricted and it's not going to grow, and it might even shrink because Russia is the second largest oil producer as of 2020. So if the world stops accepting Russian energy, that takes the second largest producer worldwide completely out of the supply. Now, if that happens and the supply declines, but the demand remains steady, which more than likely it's going to unless we see another complete shutdown, that means that companies will be able to charge more because they will have higher demand for their product. And when there's higher demand, people are going to have to pay more in order to get that product. And when these companies can charge more at higher prices, that means that they profit more. And for energy companies, that's really good because to get that energy and that oil and gas out of the ground is pretty much a fixed rate. And when demand is extremely high, they can charge more and their profits dramatically increase. And so as of right now, oil and gas has probably been the hottest industry over the last few months. And if you look at some of the Canadian companies here, me personally, I really like Enbridge and TransCanada. Enbridge chart is super interesting right now because if you pull this back over 5 years, the stock got rejected at $57 right here in 2017, got rejected at $58 right here in 2020, and it's really close to approaching that exact same level right now, currently trading at $56.90. And so we are within like 2% of our all-time highs right here, where we have been rejected twice previously in the past. And so very, very interesting levels here for Enbridge. If we see a break through these levels here. I think Enbridge could continue to go up. This is a very long-term company. I really like it. I'm probably going to be comparing Enbridge and TransCanada in a video coming up here soon, but as of right now, I really like Enbridge. I also like Canadian Natural Resources. This is a stark chart that I probably should have pointed out to you last week, because if you look at this here, you can see very clear resistance at 54. We basically approached resistance right here on the 17th of January, came down to support, hit resistance again at the exact same level, created a higher low and established a trend line right here, and then we got rejected at the same level again right here on like February 18th or 19th, and then we finally broke out on a really nice green strong candle here, and we've run up to $60.65 at the high. I could see this continuing to run, especially if the price of oil continues to go higher, and I think Canadian Natural Resources could do very well over the next kind of 3 to 6 months. Now, if you're looking for something a little bit smaller, Cenovus Energy is also a great option here. As you can see, they're starting to form a very similar pattern, but they have not broken out yet. You can see that we approached major resistance at $20.50 several times over the last sort of month and a half right here. And we have set continuously higher lows. That has formed a wedge pattern right here. And if we see a similar pattern to Canadian Natural Resources unfold, this is going to be a great buying opportunity right around $20.50 on the breakout of that level. Next company here is ChargePoint. This company reported earnings just late last week, and they actually blew it out of the water. They did really good. And as you can see here, we got a double bottom right here around $11.20, $11.50. We also have a double top right here around $15.50. And so the stock is basically trading in a channel right now. We have a double top and a double bottom, and I am watching for the breakout either to the high side or to the low side for a small short-term trading opportunity. Probably a couple of days for a few percent there is what I'm looking for on ChargePoint, and then I'll turn that trade into a trailing stop loss and hopefully let it run. Next company here is Drone Delivery Canada. I have not talked about these guys in a while on my channel because the stock has just got absolutely pummeled recently, but just in the last 2 days, on Thursday and Friday, the stock rose up from like 60 cents to 74 cents at the close on Friday, and we saw a very clear break of our trend line that was established over almost the last sort of 8 months here. And so Drone Delivery Canada is probably the first stock that I'm going to pull up on Monday morning. I'm super interested in seeing what happens here, and I can't even figure out what is causing the stock to run up. I'm thinking that it might be a job posting that just went out about the Condor drone. Maybe people are seeing that as a very good sign of progress, or maybe they're just getting a little bit too excited. We'll have to wait and find out. I am expecting a big press release to come out soon, especially with their financials, so I'll be breaking that down as soon as it comes out. Now, next company here is Higher Technologies. Very similar pattern to Drone Delivery Canada. On Friday, we saw a large, dramatic increase in the volume, and the stock shot up. I'm expecting this to continue on Monday, Tuesday, Wednesday, especially if we see continued increased volume. Higher Technologies is a company I've talked about several times on my channel. I really like the stock. I haven't made an entry yet, but I really like the company. Now, the last company I want to talk about here is Callaway Golf, ticker symbol ELY. This is a stock that is trading at pretty much the same level that it was trading at back here in 2020 before the pandemic. However, golf has completely exploded. Golf is more popular than ever. It's a bigger game than ever, and Callaway Golf sales are higher than ever. And I also absolutely love that they're the owner of Topgolf. I don't know if you have ever gone there, but it is impossible to not spend more than $100, and their profit margins must be absolutely insane. It costs them almost nothing to shoot another ball. The drinks are $10, but they cost $1 to buy. Like, I just love the business model of Topgolf. I think it's way overpriced for what you're getting, but every time I go there, it's completely packed, and so I think it's a great business. I really like Callaway, and I think this stock might be undervalued compared to the traction that it has seen over the last year. This pullback right here is basically bringing it back to the exact same level that it was trading at in 2020 pre-pandemic. So I really like the stock. Now, in summary here, you really need to focus on the Russia-Ukraine conflict. That is what is leading the markets. And when you focus on that, what I want you to think about is what factors are influencing the supply and demand, and what companies are going to be able to take advantage of those factors. If the supply of energy dramatically declines, that means that all of the current energy companies will be able to charge more and make more money. Supply and demand forces can probably be the number one factor that influences your trades. If you can understand them, pick them apart, and then put a strategy together to take advantage of them. Now, if you're interested in learning more about how to do that, definitely consider checking out my stock market fundamentals course. It is completely free. When you sign up with the link down below, you get a free trial to Skillshare. There you can sign up for my course. Any of my courses, actually, I have 5 courses on there. You can also take any other course on the platform completely free until your subscription runs out. My course is only 10 hours long, so you should be able to do it in under 2 weeks and then cancel your subscription. You won't pay a single penny. There's over 11,000 students that have taken my stock market fundamentals course. There's over 380 reviews and 1.6 million minutes of watch time. Again, it's hosted on Skillshare, completely free, and that link is in the description down below to this video. Now, if you got any value out of this video, please remember to click that like and subscribe button. Thank you so much for sticking with me all the way through, and I will see you guys in the next video. Good luck trading, good luck investing, and we'll talk to you soon.